This is Rod Kusin, Spooman for Risk. Today's date is September 10th, 2009, and today is significant. Back on the 30th of July, we ran a video entitled The Future 2009 Stock Market Crash. The subject of that video was the VIX. Due to the fact that gaps on the VIX are always filled, we saw two very significant gaps on the VIX that have not yet been filled, and they are way up here at 48.40 and 71.63. Gaps are always filled. We can take our data back 10 years if we wanted to, and you would find that gaps are always filled. That being the case, and by the way, these gaps being plotted are on a daily chart. They're on a daily chart. The future direction of the VIX is up. To fill those gaps that we just made reference to. When the VIX finally turns and heads in the direction of those gap fills, the Dow, the NASDAQ, the S&P 500 will do a repeat performance of the fall of last year. You will see a sustained bearish move, with the market dropping back to, more than likely, the lows of last year, likely even lower. Now, why is today significant? In our last video, and keep in mind, this is a daily chart, we did a video on July 30th, right in here. There was one remaining gap on the VIX below where the VIX currently was that had not yet been filled. Today, it was filled. There are no gaps lower than this on a daily chart. None. But there are gaps way up here. And here. So what makes this significant is the fact that there are no gaps remaining to be filled. Gaps are always filled, and when they are filled, they are frequently accompanied by significant moves in the market. So what does this mean? It means that we are poised. We are poised for a potential sustained bearish move in the market that could start as early as tomorrow, Friday, September the 11th. Could occur. The prudent thing to do if you own any stock is make sure you have a stop on every share of stock that you own. Any financial instrument you have, mutual fund, what have you, should have a stop. Don't allow this market to eat up whatever profits you've managed to eke out during 2009. Protect your profits. Speak to your financial advisor. Tell him about this. He probably doesn't know it. As for me, I wouldn't own one share of stock after today. Unless I was shorting the market. Because this market is poised to go down. And go down significantly. One last piece of information from this chart is the detrended price oscillator. Back in July, when we hit the last low on the VIX, the detrended price oscillator, the DPO, was way down here. Look at where it is today. There is significant divergence. The rule of thumb being, you get a new low on the VIX, you ought to get a new low on the DPO. Today we did, but we are by no means at a new low. Now, if the market does not begin to sell off as of tomorrow, and the VIX were to continue to go down some, which it could, what we would then be looking for is, again, a retracement on the VIX, another new low on the VIX with divergence on the DPO. That would give us another strong basis for concluding that on that day the market could be poised to move in the opposite direction. Okay? And to just put this into context, let's look quickly at what happened last summer. In August of last year. All right? The VIX was down here at 1957. Let's find the low. Not sure exactly where it is. 64. Okay, it looks like it's right here. 1864. Okay? On the 22nd of August, 1864 was the low of the VIX. Here's the low of the DPO. You notice how it's divergent. Or lower lows on the VIX, higher lows on the DPO. It's divergent, and the market begins to move up. Or pardon me, the VIX begins to move up, and what happened is the SPOOs began to move down. The Dow began to move down. The NASDAQ, the S&P 500. You have the same situation today. So watch out. This is your future. Don't be caught unaware. Take appropriate action to protect your profits. Talk to your financial advisor. Make sure you take the appropriate action. This is Rod Kusanen, Spooman for Risk.